You don't know me, I'm Joe Ludwig. I started Rooster Ag in the Northern Illinois Ag Center. And when we started this, I thought it'd be easy, but it's not easy. Trying to get everybody in here and corral everything. I'm old school. I scream at my microwave. I want that thing to run, but it just doesn't run as fast as I'd like. I like to see papers moving and everything going, but we're making it. We're getting along good with it. Created a mission here, I guess I did, at the Northern Illinois Ag Center to service the land, the crop, the farmer, the landowner for generations to come. So that's what we're striving to do. So recently I've adopted a saying that I can kind of put into any environment, and it's certainly true for me. I'll just let you hear it go. So, back when I was young and in my prime, I used to work all the time. Now that I'm old and turning gray, I can only work about 10 hours a day. And does that sum up the farm industry? You guys are still working it, and this year's been tough. So as a result of that, I realize I can't go forever. So we've been aligning ourselves with people that work in our company to take it on to the next generation. We've been aligning ourselves with farmers that have sons to take it on to the next generation. It's working out real well for us. So it's been fun. I wanted to take the opportunity, because I do spend a lot of time talking about the Ag Center and people in it, but I don't talk a lot about what we're seeing in the real estate industry. So we started this real estate business based on just selling farms, and it seemed like it was an easy program to just sell a farm because people wanted it, put them up for sale, and they bought them. Times have changed. We don't see that like that anymore. Very rare that we do a neighbor farm deal. We are in the process of that now. But there's not a lot. It's mostly investors coming into the market. Sitting here today for this year yet, it'll spill over into 2020. We're looking at close to 30 million worth of investor money that we're looking to park here. So how do we do it? It's one of the things people want to understand how we do it. So what we do is we take this price of corn. It comes out every day. Tyler prints this out for me, and I look at it. I circle the December of the crop year that we're going to do business in. That's my starting point. Then I look at that field and I go to old Super B and say, what's the crop insurance information on there? Do we have any data on that geography? Or if I can get the actual geography from the yield from that particular field, then I take and implement that into that factor. So then we take the farm, we look at the farm, look at the soils, look at the soil types. We drive up, take a look at that field, understand that field, what we think it would be, and then we apply a factor along with the crop insurance, and the price of corn. So we create this factor. So that gives us a real factor of what we believe rent would be on that farm based on that criteria. It's usually a little bit lower than what most people would bid if we put them out for bids, but it's a great factor for us to get started on. So this gives us a number. Once we get that number, we can find a few growers in that area and say, look, would you rent this farm for that number going into 2020? If they say they will, then we take that number and we implement it into the spreadsheet Tyler created. Takes this spreadsheet, you punch in the gross rent, you minus out the taxes, and then punch in what a guy wants for return on investment, and it spurts it out. So it's facts. We get down to it, it's facts. This is what a guy can pay. Most people don't want to buy a farm if they can't get a 3% return. A lot of them want 3.5 or 4. So it's hard to get. So this is as simple as it is, but it works. That's just how it works. It's really an interesting concept of what we've created. And we've talked about bringing auctions to the building, and we may do that if the formula isn't working or people are in a hurry and they want to move and we're not going to be able to sell it on return on investment. We'll start holding auctions in here. Big thanks to Pete Kaus for bringing up that big eye candy out in the parking lot, that big tractor out there. They do lease that out. We don't lease out the M or the B out there though. So, thanks Peter for taking the time. I'd like to be part of your business team, so if you can help out or need to talk with any of these guys, feel free to reach out to them. So, thank you.
Well, I am Dave Fogel. I'm with Advanced Trading in Bloomington. When they asked me to speak on the same agenda with Max and Steve, I thought they called the wrong number, but they didn't. So I've known Max and Steve a long time, and I'm honored to speak with these guys. They're good guys. So thanks for listening, and thanks for coming out here. I've been doing this since 1982. I started doing this. I've been with Advanced Trading since 1984. So one of the things that's come up a lot this spring is people are trying so hard to box this year into another year. You can't. We've never had 30 million acres of corn and beans not planted on, what, June 15th or so? Just never happened. So it's a different year. It's a whole set of rules and stuff. You just gotta forget what's happened before. But when it comes to the marketing part of it, it's no harder than any other year. It's just more volatile. So we'll talk about that a little bit. I'll try to get out of the way of this thing. One of the things we do in our office a lot, we talk about bids and offers and price, and trying to figure out, do I buy it here, sell it there? Well, the interesting thing about this year, the bid and offer on reality and myth, so to speak, is pretty wide. I've got people, I did a meeting in Pennsylvania, Ohio, right on the border a few weeks ago, and they didn't know where I was from, and I had a guy tell me how bad it was in McLean County, Illinois. And I live in McLean County, Illinois, and he told me nobody got planted. Well, that's not true. They got planted. Wettest spring I've ever seen, wettest spring you've ever seen. Historically, if we can raise a good crop in Illinois, Iowa, Nebraska, and Minnesota, we get by pretty good. We've had plenty of years where Indiana suffered, Ohio suffered, other places. But if those 4 states are good, markets don't go up very often. They're pretty happy with those 4 states. That didn't happen this year. Big problems in western Minnesota early. Illinois, you guys know all about Illinois, probably the worst of the 4 states. Iowa, mostly good. A few spots you got to worry about. Nebraska, mostly good today, but boy, a lot of problems before planting, as you guys know. So we had the wet spring, and then we had a whole bunch of trying to figure out how many acres got planted, not planted, how late. Are we going to make black layer? Are we going to get to the final crop size? So honestly, today, the hardest part of our job, corn rallied about $1.10. I got a slide coming up about this. And beans rallied about $1.40. And the calls that we're getting are, why aren't the markets going up? Don't they know how wet the spring was? Well, they do. That's why you want $1.10 to $1.40. So really, to go up any more or not go up anymore, it's totally based on the crop in the ground today. I know nobody in this room, and I'm not saying I'm any different, nobody in this room believes the USDA number, right? They're the worst guys ever, right? Maybe not though. They've had plenty of years they did it right and got it right and found out they were not so far off. But the market today believes their numbers. And it'll change a lot if down the road they do another survey here in July and we get different numbers. But for now they believe our, and the essence of the call was he was going out of business. He didn't think he could survive the year. He just didn't have the profits he needed. Prices were really bad, as you guys know, in the spring and all that stuff. And so we talked for an hour about how to just survive and maybe get out of the business. And that guy today, life's changed. He was lucky enough to have all his corn and beans from the 18 crop unsold. Hadn't done much on 19. He had done some marketing, but via options, of course. And today he's in business and thinks he'll be in business. So when you look at what happened with the flooding, definitely a have and have not situation. Those that were not able to plant, you know what that looks like. But for those who were able to plant and maybe have a good looking crop, it is life changing. $100, $150 an acre difference on corn. And so I don't get a lot of calls like this. It's pretty unusual, but it's kind of the fun side of the flooding part, if there's a fun side at all. It's nice to have something successful come out of it, because there's a lot of pain involved, as you guys know. So the last 4 or 5 years, not much upside movement, not much downside movement either. So why would this year be any different? And what happens, it was way different. And I think people were unprepared to handle it in the most part, and that's why a lot of grain got sold really cheap compared to where it got to. For years, the farmer community doesn't like the word funds. I love the funds. You guys should love the funds if you grow crops for a living, because funds make the market move. And what the funds have done historically, they take it lower than it should go, and they take it higher than it should go. And that means you can do things you need to do for your business. Corn, as we came into the flooding, prior to the flooding, we had a record short corn position. And it was hurting, right? Because they were really stepping on the market, and you guys were hurting price-wise. Pretty big bean position. What got interesting with the funds is that things were happening to make them feel good. We came into the March grain stocks report, the last trading day in March. You guys remember that one? We were thinking a 1.6, 1.7 billion bushel corn carryout. They found a bunch of corn because demand's not very good. We all want to talk about how great the flooding is. No one wants to talk about demand. We got a demand problem. So demand's not very good. Markets went down a lot more after this report came out. We really hit this thing hard. It was ugly. We were in trouble. Now you got a 2.1, 2.2 billion carry out. Well, what got interesting was it rained. And it rained and it rained. I've never seen rain come down like this. I like to golf on weekends. It really messed up my game, you guys. So it wasn't just the farmer that suffered. Me too, right? Suffered the most, this is it. Ohio, Indiana, Wisconsin, South Dakota, Michigan, Illinois. And Illinois is the big one in that group. I was in South Dakota 2-3 weeks ago doing some meetings. There's very little planted. Now, does the market care about South Dakota like Illinois? No. But when you get Illinois in trouble, the other stuff starts to matter. So it's been interesting, no question about it. Now the funds have a problem. They can't get out. We talked in our office a lot about this, how as this market started taking off with the rain, who are they going to get out with? The farmer's not going to sell. Who are they going to get out with? The commercial grain guys aren't going to move it. So they had a big problem. So this record short corn position and a pretty large bean position ended up very, very unprofitable. A big drought affected the whole corn belt. In 1988, we had another big drought, affected the whole corn belt. Then we go all the way to 2012, right? We've had little droughts in between, but those were the three that really moved the market. Then you had you had other years markets go up, 95, 96. You had the flood in 93, 2012 or 2008 through 12. Those were crazy years. But in my 35 years, we've had 3 years where we had a big drought. So what are the odds that USDA is not going to give you a good production number typically? This is acres, I realize, but when you come into that first August report every year, I think this year it's August 11th, we, in 2008, 9, 10, 12, we got to $8 corn, $16 beans, right? And it has messed everything up ever since, because now we look at $4.50 corn, $5 corn, whatever price, and we don't like it. There used to be a day where X amount of bushels got sold by harvest time. And that number is nowhere near what it used to be. We do not forward price grain anymore, hardly ever. And it all happened starting in 2008. So you got 2008 plus years where you didn't sell early, or you did sell early and you got burnt. Now we don't do it anymore. So you walk into August 11th every year, or whatever date it is, and you're not very heavily sold. And so 3 years out of 35, you've had a drought. The odds are really high. USDA is going to give you a number that's pretty good because you're all pretty good at what you do. We are really good at growing crops. Too good at it. We're great at it. We're getting better at it. People are going to find a way to bring corn in. It's already happening. Barges are coming up from South America, so you don't need to raise every single bushel as long as you can buy the bushels. And there's going to be a bunch of rationing things that happen if this thing has more legs to it. If this market takes off further, people will find a way to use something else besides corn or beans. It's always that way. But don't think the market's just sitting back hoping the crop is just great and it's bigger than we think it is. They're not going to wait. So you got the wet areas and then you got the areas that got planted. So what's already happening, and has happened for several months now, is the places that know they don't have a crop, they're working really hard to buy the crop now. And there is still crop to buy. A lot of farmers sold a lot of crop way too early, but there's still a lot to buy. Not a lot, there's still enough to buy. And so what's happening now is everybody is acting in these areas without crops planted as though the crop in the bin is my new crop. I've got to get those bushels now or I'm not going to get corn in the fall. There's no corn to get. And that's got tremendous impact on the basis. So we had a $1.10 rally in corn. That bought a bunch of corn, way before a $1.10 rally. $1.40 in beans, bought a bunch of beans. So in order to get the rest of that crop out of the bin, it's probably going to take basis. And it already is. It's already happening. There's people in Ohio that are looking at 75 cents over for old crop corn. They've never seen that. 15, 20 over is a good number for those guys. 75 over, they're going to find a way to get that stuff. And areas are going to fight. So if you're in an area that's got a crop and you're by one that doesn't, they're going to fight. And that'll be good for the farmer that's got bushels. So what we're doing right now with our guys is there could be more upside. We could have a problem with the crop in the ground. They could totally change the acres in July or whenever they report that thing. It could totally happen. So you got to find a way not to give it away. And the way we like to do it is we like to wait for basis to get really strong, and until then, put floor prices underneath it. So you got to figure out this piece. You have to understand basis. The piece that's probably the least understood is the one that we're the most familiar with. And you have to understand spreads. Spreads matter a lot. And I'll talk about 20 crops in a second in terms of how it's not unusual. So here's the numbers, just so you guys know these numbers. But we went up to 473 on December corn futures, and then back to 363 by, whatever. That's a 52-cent break. And people were mad that it broke, and you're mad at USDA, but it's not their fault, it's not the market's fault, it's our fault if we didn't defend it. You've got to defend price. Soybeans, similar, dropped also 58 cents. It may come back, it may not come back. If I was you and I had corn to sell, and I had beans to sell, I would assume it's not coming back, but I would make darn sure if it does, I'm there for it. And there's ways to do that, and you guys know that. I'm not gonna sell it, but I love crop insurance. It kept people in business in 2012. So you got this Feb average, right? Then the market did this, 73 more cents, it went above the Feb average. And then it's come back a little bit. Anytime you can beat that first Feb average, let's do it. Let's just get something done. Let's sell something, let's buy puts, whatever. But the market gave you a chance to beat that average. I'm not going to spend a lot of time on crop insurance. There's a guy back there in the red shirt who is by far the expert in this country on crop insurance. But crop insurance is a great thing. Basis. Let's get into basis a little bit. Basis is going to be the most interesting part of what happens in the next few months, because if the flat price is out of steam, I don't know. It may be, it may not be. We'll never know until it's over. But it doesn't change the fact it's hard to buy grain right now. So we still have to buy a lot of corn. There's still a lot of corn to buy, and it's gotten really hard to buy it because the price, broke 50 some cents, came back a little bit. So as a country, we're kind of running out of corn. It's hard to buy it. So it's either going to be one of two things. Either the market's going to rally and that corn's going to move easily, or the market is not going to rally. And if it doesn't rally, you're going to see basis levels that are crazy in the areas that don't, have the corn. And if you're in an area with corn and not a crop in the ground, it's going to be maybe historic. I don't know. It'll be different. But it's hard for us to buy corn right now in this business. Mark. And you want to know why marketing is so hard for everybody? Marketing is hard because, and there may be tons of exceptions in this room, but I just had this happen last week. I got 40 people, and all 40 had some bushels to sell. And all 40, when I asked them if they had any idea what price they were going to sell it at, they all laughed. They had no idea what they were going to sell the grain at. So think about marketing. I got this crop in the bin. I got this market moving around pretty good. I want to sell it. I don't know where I'm going to sell it at. So what makes you sell a bushel if you have no plan and no target? Your checkbook or emotions, right? That's why marketing is so hard. Nobody knows what they're going to do. They want the market to go up. They want to tell everybody how bad the crops are, but it might not go up. You don't know. So don't spend any time trying to figure out what the final crop size will be, because there's no money in it. There's nothing to gain out of it. Trying to figure out the final crop size, put all your time into learning what you need to do on your bushels. That's all that matters. If it goes up, we'll do lots of great things. But if it goes down, don't get hurt further. It doesn't have to be that way. And another reason why marketing is so difficult is you walk into a room and a guy is just talking big words and abbreviations, and it's fast, it's furious. If you guys can farm for a living, I've been in your tractors, I've been in your combines. If you guys can farm, you can do this. Because farming is hard. It's really hard, and it's very technical, and it's very unusual, but you just got to find a way to understand the words so they're not so bad or not so scary, and that's what happens. But there's contracts out there and there's hundreds and hundreds of contracts, and they tend to do okay when the market does this, because anybody does better than the U.S. farmer if you sell something, because you guys don't sell much ahead anymore, and that's a general statement, not all of you do that. But when the markets do this, we got people that are $1 out of the market, and some didn't raise a crop. That's not good. So get your arms around 18 if you have it. Definitely get your arms around 19 if you grew it. But don't forget 20, because 20 is the one that could really be the most painful, because it's going to have all the after effects We may have a bad year next year, but historically, what are the odds of having another crazy planting year like this? And what are the odds of a drought? I don't know. I mean, it can happen, right? But if I had to make a bet on 20 production, I'll bet it's good. And that's the way you should look at it. And if it's not, crop insurance. I had people in 2012 that had record income on crop insurance. I don't think your risk is drought. I don't think your risk is flood. I think your risk is you mess up the price. You cannot predict price. There is nobody in this country that figured out it was going to rain like crazy. And there is nobody that can figure out today what the real acres are that aren't planted. And there's nobody that can figure out how many of those acres are going to make it to the finish line. It's been an extreme year, so can it frost early? Sure, why not? What else is left, right? Let it frost. So there aren't any price experts. We're not price experts. All we are, we're really good at trying to figure out how to get this to be in your favor. We're really good at basis. We're really good at spreads. That's what we do. And we're really, really good at getting you to do it. That's the gift I think we have. And we care about it. So there are no price, there's no price experts. And you cannot be in this business and not want prices to go higher if you grow it for a living. I get that. I totally get it. Anybody would be crazy not to want prices to go higher. You can root for higher prices, but don't get upset when it goes down. Just defend it. Stop it. Stop letting USDA be a four-letter word. They're not. They are what they are. Sometimes they're right, sometimes they're wrong. It doesn't matter if they're wrong because the market's going to listen to them. And if they are wrong, it'll get fixed later, I think. Maybe they're not wrong. A couple of years ago, no one thought we had the crop size we did, and we did. They were right. Don't be the victim. We went from 5 years of just brutal markets, hard to make a living, really hard to make a living. And this is, if you didn't plant, it is what it is. You're going to get your preventive plan, you're going to get X amount of dollars, you're done. But if you did plant, this is opportunity. This is really good. And you're going to have to learn, if you haven't done it to date, I think you're going to have to learn how options work if you're a late planting guy, because I would not be comfortable making cash sales on a crop that got planted June 10th. You can't do it. It's just too scary. You might not make it. And what do you think basis will do if you frost in an area? It's going to go nuts. So I think that's all I got. I do. That's all I got. I thank you so much for listening and coming, and I thank Joe and his group at Rooster for having me here.
Good morning. Greetings from Iowa, the tall corn state, the land of balanced state budgets, and no governors in prison right now, by the way. So it's good to be here. Again, it's my pleasure. Max, we've never been on a program before, but we travel a lot of the same circles in late August. It's usually called the Farm Progress Show. It's not my first time in Northern Illinois. I've been here doing meetings for Cargill at exotic places like Kishwaukee Community College and Rochelle. And I'm very much aware of what's going on with your crop. So I titled my presentation, Short Crop and Late Harvest. What are you going to do? My handout's inside your packets on the left-hand side. I'd say just follow along. I'm going to kind of be on the backside of Dave Fogel. By the way, Dave and I have done some programs together. Dave, I was still in graduate school in 1982, so you've got to be much older than myself. I'm going to give this presentation tomorrow at 7:30 a.m. in Grundy County, Iowa. I'm going to change the title. Grundy County is one of our richest soils in the state. We have 6 seed corn companies in that county. And they're not going to want to hear about a short crop, but they're going to want to hear about a late harvest. And I think that is a concern that probably will keep this risk premium in this market. I believe the short crop, late harvest is not going away. I believe that it's going to continue being a concern. And so what I did was I built my message around myth busting. Anybody ever heard of the show Mythbusters? Anybody? Yeah, Discovery Channel. These two crazy guys and their staff, they take on all sorts of stuff. Anyway, they take on all sorts of things. Somebody will say, can you find a needle in a haystack? They'll spend an hour trying to find a needle in a haystack. And I think that's where you're at in Northern Illinois right now. Is we're following the Twitter feeds. We're following the market buzz. Corn's off 6, beans are off 8, and the USDA's got to be wrong. Somebody's to blame. This crop's planted late. There's no way this crop is going to mature in a timely fashion. We're going to have a bunch of wet corn and wet soybeans to deal with. So I think we keep this risk premium in the market. Thanks, Gina. So here's what I'm going to do. I'm going to bust your myths. I believe the myths that I'd like to bust this morning. Number 1, acreage reports results. USDA is wrong. They'll wake up and they'll figure this out one of these days. Number 2, expect a frost to damage your late planted crops. Possible. Don't get me wrong. We could have a late frost. Myth number 3. National Weather Service's forecast for the last month that we're going to have a cool, wet summer, and that will slow crop development. I saw your forecast for Friday. I'm getting the heck out of here. The weather forecast changed about 10 days ago. If you missed it, I'm sorry. If you would, weather forecast, especially the European model, it changed this weekend. It changed from Friday to Sunday night. And if you're missing those, I'm sorry. I get my information free from Champaign. I don't know, I guess you're probably still paying for yours. The final yields will be way below the 30-year trends. There's no way that we could even be close. And the final myth I'd like to bust is that corn prices will peak. The futures prices will peak post-harvest, kind of like what we did in 10 and 6 and 2. And that happens about 20% of the time in the last 20 years. And then you're going to see what I teach. I like to teach to crop insurance. Joe, thanks for the compliment. I like to make crop insurance interesting. Myth number 1, USDA is wrong. They accumulated this data on the 14th of June. They had no idea we weren't done planting. And so they're going to go back and they're going to resurvey those 14 major corn-producing states, including Illinois and Indiana and Ohio and South Dakota. Those are the big 4. They're all in the top 10. It's nice to hear Illinois in the top 10, isn't it? All right. You are in the top 10. You're the number 1 soybean-producing state 2 years in a row. And you're the number 2 corn-producing state. And you probably won't catch Iowa anytime soon. And you said, why? You're cheating. No, we plant an extra 2.5 million acres. It kind of helps assure that. When I look at USDA and their release of June 28th, planted acres, they're wrong. But they're within 2 million acres. Is that close enough? Statistically, they are sound. They are so much more sound than anybody else that's doing this. I got somebody that signed up my cell phone for a service, and it's somebody that I have no idea who they are, and all they're doing is churning accounts. You with me? You know, I was supposed to get out of my long feeder cattle position yesterday, by the way. So be careful of where you're getting the source. When I look at USDA data, their margin of error in a 90% confidence interval, I took those statistics classes, is about 1.5% margin of error for corn. For soybeans, their margin of error is 2.2%. It's a little under 2 million acres. And that's what, when Dave says, when USDA speaks, people listen. And I don't pay attention to people like Darren Newsom that says we ought to do away with USDA and let private industry do this stuff. And trust me, ADM, Cargill, and Bunge, they'll get her done for them, not you. And you'll look just like Brazil and Argentina and the Ukraine and South Africa. where there is no government reports, there's nobody using scientific methods. Myth number one, USDA knows what they're doing. On June 14th, they probably did not assess all of the prevented planting acres, and especially those acres that got planted later. They do use satellite imagery. They do use technology. And on Monday morning, August 12th at 11 a.m., they will adjust those numbers. I still think they'll be within 2 million. I still believe on Monday morning, August 12th, they still will be close to what those acre numbers are. Myth number two, we're going to have an early frost, I know it. This is kind of like being shamed by your parents. I know we're going to have an early frost. This is the year. It's going to go cool next week. We're just going to have an early frost. The researchers from the land-grant universities, I'm from Iowa State University. I'm not a Hawkeye, all right? Probably discussed the Hawkeyes more than you do, all right? The research from the land-grant universities and NOAA is this, is the killing frosts in the fall are coming later. On average, the killing frosts are 5 to 6 days later. And that has primarily changed since 1985. So if you want to bet your farm and the future of your farm on an early frost, good luck. God bless. I'll pray for you. I would be careful about that. Is the data says that we're getting later killing frost, especially killing frosts of 28 degrees Fahrenheit and below. Myth number three, behind the back. There we go. Here's your man. My source, Eric Snodgrass, meteorological scientist, University of Illinois. Eric puts out videos 3 or 4 times a week, and we're going to hear from Eric. Basically, what Eric is saying, as of yesterday morning at 5 a.m., if you missed the videos, they're free. They're coming out of Champaign. What Eric has been saying for about the last 5 days is this. The jet stream is shifting. The jet stream is moving to the north. It's been sitting right over us for about 2.5 months, and that's why we've been deluged. But the jet stream is moving north, and El Nino is fading, and it is fading fast. El Nino is fading fast. It was confirmed last Thursday at Columbia University in their research. We're likely moving to ENSO neutral. We could already be there. The strongest El Nino effect was probably this spring. And so we thought we'd probably be under the influence of El Nino, but it now appears as though we're moving very quickly to ENSO neutral. And so the waters in the Central Pacific are no longer warming. They're actually starting to cool, probably not going back to La Nina, not initially. And so the fact is that the jet stream that's moving north keeps the Gulf moisture open. Somebody walked in about an hour and a half ago and they said, boy, it looks like rain. Is that berry? No, that's not berry. That is convective activity that's occurring from your plants. You've got so many plants that are growing and respirating is they're giving off their own moisture. There's going to be moisture around. Even when you go into this hot streak, and I think yours is like ours, Thursday, Friday, Saturday, and Monday, we're going to go back to normal temperatures. So I hope you are using www.agrible.com. www.agrible.com. You provide your username and you create your own password, and they email you on Monday mornings and on Thursday mornings, and it's a great tool. So what Eric has been saying basically since last Thursday, but really emphasize this, tomorrow his long-term forecast comes out, and it's not only the US, it's South America, it's Europe, and it's China, and it's where we have this competition. So what he indicated is what we're going to see in the next 2 weeks is we're going back to normal temperatures, and then these crops are going to make their own moisture. This should be the hottest time of year, and this week will probably be some of the hottest of the summer. But then the ridge is going to sit just north of us, and we're going to get ridge riders just like what we did last year. And that's why the market's taken about 15 cents out of the futures price in the last 2 days. What about yields? And I agree with Dave. I don't think anyone knows what these final yields are, and that's why I think a lot of this risk premiums here is the uncertainty of acres and the uncertainty of those final yields. And I don't think we're going to know these final yields until we get to January 10th, or Friday. Is that USDA will probably try to assess those to the best of their ability. Our 30-year trend yields, after 6 consecutive years of above trends, would indicate that our U.S. corn trend yield was 176.4, and our 30-year trend yield for beans is 51.6. I can tell you with a high degree of confidence, we're not going to make trend. I believe the late planting will likely mean that we're probably going to be somewhere around 5 to 10% below trend yield. And you can get into the speculation. I heard somebody from Iowa State say 135 bushel an acre, taken out of context. All he did was he said if we would compare this year's late planting to 1993, and you planted 1993 hybrids, we'd be in big trouble. You don't plant 93 hybrids. Is this corn and soybean crop, even though planted late, is going to be below trend yield? Don't get me wrong. So I'm going to step back from the myths, and you might say, I don't like the guy from Iowa State, I don't trust the guy from Iowa State, but let's try one more. Here's my 5th myth. Corn futures will peak post-harvest, just like they did back there in 10. I don't think so. I believe that the highs are in. How's that? I believe the highs are in. I think the market's already assessed your acres. I think it's assessed your planted acres. USDA is already using 91% of the planted acres as harvested, so they're already assuming we're going to see more abandonment of those types of acres. And what you see in front of you is a 19-year trend. If I took December corn futures every year for 19 straight years, 2000 through 2018, this market tends to rally in the late winter and peak in the late spring, sometimes early summer. Sometimes early summer. But over the last 6 years, the corn high is somewhere between April 9th and July 14th. I think corn's doing what it's done for the last 6 years. It rallies with the uncertainty of planting the Northern Hemisphere crop where 85% of the corn's produced. And soybeans don't necessarily follow this same path. But then once this market feels comfortable with the crop that's growing and the weather forecasts that are coming, then the futures prices decline. I don't think we're going to see the type of decline that we've seen in the past. I think December corn's going to be well supported at the gap, 420 to 422. I just won't be surprised to see eventually we put pressure on this futures contract, and the market's done what it's done the last 6 years. It peaks much earlier. And so I believe the challenge for you as a producer or an agribusiness professional is to help farmers overcome these emotions. See, when we finally rally, I call that greed. And there was a lot of greed this year, Dave. Is the market went up $1.10 in 5 weeks. And I think put in a high around 473 the December. But then our ego gets in the way. And this is where most of you producers are at today. You don't want to hear that the high's in. You want to hear that we're going even higher. And that we're not just going to stop here. Is somebody's got to be wrong, and it's not you, so it's the USDA. It's Chicago. Max, I don't have to drive far to LaSalle Street to beat the crap out of those guys, do I? But since 90% of it's electronic, you just be beating the crap out of a computer. How's that? It won't even be open outcry. But what I think a part of the challenge is to do nothing. And I'm not saying sell your whole crop. Here's the lessons learned from Iowa. And I think these are valuable lessons. Whenever we have a short crop, and we've had a short crop, trust me, 77, 83, 88, 93, 95, 2002, 2008, 2012. It's not as if we haven't had these experiences. Here's what I think you need to learn from them. Number one, yield losses are not as bad as you first thought. People were telling you you'd be 20, 30% below trend, and I'm saying 5. I won't be surprised that we're 5% below trend yield, because we're not going to get that Illinois boom 203, 206 that we've seen 2 of the last 3 years. We're probably going to get Iowa's 195 and Nebraska's 192, and the best corn in the belt is sitting to your west along 80. The best corn in the belt is sitting to your west. So those farmers won't have the same basis opportunities that you have. Number 2, the crops are slow to dry down. There is the big concern. Have you booked your propane yet? You better think about it. You are likely going to get yields higher than what you thought, but it's going to be wet. It's probably going to be a crop that dries down slowly. We helped ourselves with the heat around the 4th of July, and we're helping ourselves with heat the next 4 days. You want heat pushing this crop. The late planted crop, you want this heat right now. And then when we get to tassel and silk and pollination, then you don't want that extreme heat. And that is the forecast that's coming at you. Is you're probably going to get better yields, but I think it's going to be wet. Number 3, the futures prices peak much earlier than what we thought. And so if the high is in at 473 on the Monday after Father's Day, now what are we going to do? Well, that's an interesting one, and I'm not here to say I know exactly what you should do. My second set of points. The processors will strengthen their basis, especially the big boys like Cargill and ADM and Bunge. They are coming after your corn now, and they're coming after the corn at harvest. And it's up to you. You can do what I see on this television show, and I love it. It's not Mythbusters, it's called Hoarders. Are you familiar with that one? You're a hoarder. You lock your grain bins, you put 3 locks on it, locks aren't coming off. It's the basis that's going to get that grain moved. I would guess most of you are not going to want to move the grain until you got the next crop coming. And about the last week of August, the locks are going to come flying off. But the cash price won't be near as attractive in late August and early September. And there will be uncertainty about who's going to provide that corn until we have that next crop coming? Farmers will hoard their old crop bushels, and they'll stop selling new crop. Now that's from Iowa. That would never happen here, would it? It's happening. You feel so bad that maybe you missed this last run up, 3 times the charm. You missed this last run up that you won't sell. To me, futures are going to trade in a very volatile fashion in a 30-cent trading range. Basis is your game. This is in your wheelhouse. This is your ability to understand that I can go ahead and move this grain. You had the mother load of corn last year. You grew your biggest corn crop in history last year. And so I would guess there's a lot of corn that's sitting out there that still needs to move. Your local basis is somewhere between 4 under and 17 under the SEP. And so that is probably as an attractive a basis as you've seen since 2012. You just don't get these basis opportunities. So I'm suggesting you really have to understand how this market responds. Lastly, and I think Dave really brought this to a point, demand destruction occurs at higher futures prices. In the WASD released on Thursday, July 11th, we lost feed demand, we increased residual, and we lost export demand. Ethanol is carrying your water right now, folks. Ethanol is carrying your water. And fortunately, the ethanol plants are still online in the Western Belt. I think they're probably coming offline in the East. If you have to bid 75 over to get your corn to an ethanol plant in Ohio, I'm guessing they're going to go on plant shutdown here in about 6 weeks. And they won't make ethanol. And so ethanol that's consuming 40% of our crop, and a third of that's coming back as dry distiller's grain, is carrying us right now. We've got a large livestock industry, record hog production, record poultry production, but understand that they're not afraid in Kansas and Oklahoma to feed wheat. And there's going to be a lot of cheap feed wheat available to the marketplace. So when we have a short crop, we lose demand, and that's already been underway. Future spreads disappear. Corn is gone. The spread between the December corn and the July corn last year, that was 30 cents that paid you to leave that corn in the bin, is 12 cents right now. This market's saying, hey boys, I'm not going to reward you if you want to store this corn till next June. I'm not going to reward you with a future spread. The market is bidding to get corn out of your hands now, and I'm not saying that I know what July 20 corn's going to do, but your spreads are gone. And that happens when we have some sort of a short crop. Farmers often miss the rallies, Iowa farmers only. Iowa farmers miss the rallies. They store large volumes of new crop bushels, both on farm and commercially. They missed the spring rally. And they've got fewer bushels. They've got extra space in the bin, so they're going to stash these bushels and hope that somebody wants to bid up for those bushels down the road. And I'm not saying there might not be basis opportunities next spring and summer. But if your processors, if the ABCs say, I need corn, we'll bring them in on a rail car from Iowa and Nebraska and North Dakota, because that's where we're going to have a surplus of corn. We've got more corn than we have demand. And don't forget, Iowa has 44 ethanol plants, and they're all running. And so that sucking sound is northern Illinois sucking corn from other parts of the belt. There's not excess corn sitting to our north or sitting to our east. It's going to have to bring corn further. And that's exactly what the processors will do. And then I want to go back to this line, and Joe said, yeah, I'd heard that before. Short crops have long tails. Source, Dr. Darrell Good, University of Illinois, August 2003. When we have short crops in the Corn Belt, we tend to have demand destruction. Then farmers respond by planting larger number of acres the following year. Touchdown, Iowa State, touchdown. That's it. See that field across the road? That's a PP field. That's prevented planting, and you might be in this room. That's a PP field. I will bet you $50 there's fall fertilizer on that field this fall. And I'll bet you another $50 that's going to corn. Think through that. Well, how do you know? He might be planting beans. No. He's already tilled it twice. We call that recreational tillage, by the way. And not all these fields are getting laid black. We're seeing a few cover crops. But mostly these fields that are prevented planting, it's a race to see if the volunteer corn or the mare's tail can be the tallest. Repeat that on air, Max. It looks like Illinois is having a tall mare's tail contest this year. Most of those fields are going to get sprayed. They're going to get tilled. There could be some winter wheat, but they're going to get planted in 2020. So if we're missing 10 million acres in 2019, we're going to get them next year. Short crops have long tails. Let's talk a little bit about a farm that I've really enjoyed. And this is a case study farm. It's actually 3 farms. I've got 3 marketing clubs. I've got 6 women marketing grain groups. I teach a little crop marketing every now and then. And this is a farm that I call Marty Merchandiser. And so what I want to do today is I want to share with you what Marty's doing. Marty's actually one of 3 farmers that I interview periodically every month. And I've been tracking this dog for 3 years. It's because I think farmers' response is real key. I'll just give you the basic background. This is the 2018 setup because I've got his break-evens, I've got his cost of production. They're probably like your 2018 break-evens and cost of production. He's farmed about 1,000 acres, 500 are owned, 500 are rented. He's paying $250 an acre cash rent. It's great relationships with the landlords. Neighbors are paying $300. He's got $300,000 of cash flow needs, and this is the key. Circle $300,000 if you got the handout out. This is about cash flow. This short crop, late harvest, is about your cash flow and managing risk. Because you could really screw up this year if you're not careful. Marty's got about 100,000 bushels of on-farm storage, and he hates to go to town. He rarely ever puts any bushels in town at the elevator of the co-op, but he loves the people at the elevator of the co-op. He just doesn't like paying drying and shrink and commercial storage. And then his basis is 15 cents less than what he can get at a processor. So most of his corn is going to an ethanol plant. And most of his beans are going to a crusher called ADM. And so he's really in tune with his marketplace. And you can see his APH. They probably look too low for northern Illinois. His 10-year simple average is 190 bushel an acre corn, 53 bushel an acre soybeans. Think through that. He keeps his production evidence by farm. He gives it to his crop insurance agent every year immediately following harvest. That is a religion in Iowa. You keep your records by farm, even if you use enterprise units. And you turn your production evidence into your crop insurance agent every year, immediately following harvest. And then you can see that he had 10,000 extra bushel left over, and you probably got a lot more than that. God bless you. And you can see how he tracks his break-evens. He does an APH break-even in March, and once the combine's done, the crop's harvested, he turns in his production evidence. He calculates what he calls an actual break-even. This is no family living, folks. He's going to have to build in a little cushion to family living. In 18, he had a great year because his break-evens were low and he had a chance to forward price, and Argentina saved his skin. As the drought in Argentina in the late winter of 18 really saved him, he was able to forward price 50% of his corn and 80% of his beans. And almost all those bushels are going to the processor because of basis. He doesn't pay drying and shrink on his corn. He doesn't get 90 under for some bean basis like his neighbors. He gets 45 under going to a processor for beans. And so what I want you to do is just kind of follow along. This is a farmer that really knows his cost. He really knows his cost. And so for 19, when he put together his 19 break-evens, he thought using his APH, which is up to 192 now, because we got to add that 210 bushel an acre yield that he got in 18, just like you did, he thinks his break-even is going to be around 339. Now here's the short crop issue. He doesn't know what his actual break-even is going to be, and that's where most of you are at. It depends. It depends on my final cost divided by my final yields. Soybeans, the same way. When you see the soybean number, he calculates his estimated cost. He divides that by his APH, which is up to 54 bushel an acre now. And those are key. I believe in my heart of heart only about 30% of Iowa farmers actually know those numbers. 70% are guessing. And the more land that you own and less cash rent, the more you guess. And it's because you say, well, that's not important. There's nothing I can do about it. This is the start of a marketing plan. And Marty's one of the better marketers that I work with. And I work with about 2,000 Iowa farms. And what I want you to see is, what is he doing? How did he market his old crop? Well, he's using what we call the matrix. And the matrix was developed at Iowa State in 1989. It's kind of morphed, and I noticed every elevator's got the same picture anymore. It just doesn't have Iowa State University on it anymore. It depends. What do you think the futures are going to do? Go up or down? And what's the basis? Is the basis going to be strong or weak? I want a strong basis. And this is how we teach thousands of Iowa farmers and farmland owners and agribusiness professionals. Marty likes to use non-roll HTAs. He likes to commit bushels to the ethanol plants. He's got 3 of them within 60 miles of his farm, and he's got trucks. And he can move a lot of grain in a short period of time. So he uses HTAs, especially new crop. So he's already got 19 corn and 19 soybeans priced. He even used HTAs on his old crop beans, which he holds no beans. Marty has no old crop beans. He's not playing that game. The government gave him $1.65 a bushel last December. So he's not playing the crazy game of storing a lot of old crop soybeans. Then the other strategies that Marty likes to use is in the fall and winter, when the futures aren't going anywhere, Marty likes to lock the basis. He works with his processors. He locks the basis. He delivers those bushels. He gets 70% of the cash value. You could do the same thing with a broker, should you decide to. He could use minimum price contracts, but he doesn't like to pay the premium because it's all time value. And so he doesn't like to buy options in the fall and winter. He likes to deliver bushels. Remember the $300,000. He's not debt-free. He's not debt-free. He needs cash in the fall and the winter. On soybeans, he's done. He moved most of his soybeans last December. When Trump and Z were getting together and the market rallied 80 cents, that's when he said, I need to go ahead and finish moving soybeans. And the government said, here's $1.65. Merry Christmas. And that's what the government did for you. They gave you $1.65 on top of whatever the cash value of the crop was. And so he used that MFP payment. By the way, you're getting another one next month for the 19 crop. So he used that MFP payment as part of his marketing plan. And so heading into this summer, Marty's down to 10,000 bushel of corn. I called him Sunday night and I said, Marty, you got any corn left? Nope. I'm out. Cleaned out the bin Friday. I'm out. Sprayed the bin Friday. I'm out. I'm going to the county fair. Going to the state fair. Going to spend some time with the grandkids. I'm not going to spend July and August worrying. I challenge you. Can you do that? Can you clean out grain bins and spray them and get them ready for harvest? Marty did. He's done. He's not playing the crazy game. Let's see if I can get an extra nickel by delivering the crop. So here's his old crop marketing plan, and this is what we teach at Iowa State University, all right, is we teach that marketing plans have 5 components. Number 1, they have dates. Number 2, they have prices. Number 3, they have bushels. Number 4, they have basis implications. And number 5, the reason that you took that action. So just briefly, and you've got this handout in your packet, here was his strategy. He's always selling a year ahead. Marty's got 20% of his 20 corn already priced. Wouldn't be too many people in this room that would say, what? He's got 20% of his 20 corn already priced. HTA to an ethanol plant. All over 420. You said, well, when's the last time I could have got 420? Yesterday morning, about 9 o'clock. It's not there now. So Marty's always looking out. He's often looking a year ahead, especially on corn futures prices. And you can see that maybe he didn't get 440 or 450 that you could have today, but he had a great year because he's got a low break even. And he's not hoarding bushels. He needs cash in the fall and winter. He was down to 10,000 bushel, and Friday they went to town. You said, why? Because he had time. And because the basis was attractive. Because it was an attractive cash price, he lightened the load. He's done spraying. He's done side dressing. There's a lot of corn that got side dressed in Iowa over the last 5 weeks. They got supplemental in when it was about 3 to 5 feet tall. And so you can see that he's raising corn and soybeans, and you can see that he made money in 18. But he's not hoarding bushels. And you're blessed with these higher cash prices, but I think you've tied your 18 bushels to your 19 shortfall. Saying, well, if I don't have a full complement of corn in 19, then I'm going to hang on to the 18 bushels, and I hope those bushels are really cold and really dry. I'd want to be in these bins every week now. Is the shelf life of a bushel of number 2 yellow corn in the Corn Belt is about 8 months. Once we get into June, July, and August, that corn starts to break down. And that's when we have all sorts of problems of spoilage and insects. And I'm hearing that from a processor. A Bungie processor told me last week they're seeing some really poor quality corn arrive at the processor. Farmers lost track of their old crop corn. They didn't get back in those bins. They just assumed it was number 2 yellow. And so, in essence, understanding basis is important. And if there's anything that I'm going to do is probably to destroy my reputation. This is our basis trends for the last 5 years in central Iowa. I'm right in the middle of the state, almost straight east. If you follow 80, and I know I came up 88, all right? Marty knows his basis trends, the July futures. Now, July's into delivery. But I contend 5%, maybe 10% of Iowa farmers even know these numbers. They don't know basis. They never spent the time to track basis. They couldn't answer this question. Is this an attractive basis? Well, yeah, it's attractive. That black line is about as good as it gets. And that's where you're at in 2019. You're probably about 10 under, where we were probably about, 35 under at the co-op. But we're 10 under at the processors. ADM, Cargill, Bunge, and 44 ethanol plants are setting the pace. There's where our good basis is. Our good basis isn't going to be sitting in the interior, especially a co-op that doesn't have rail. And that's the largest co-op system in the state of Iowa. They've only got 76 outlets, just a little one. And so you'd say, well, why would I want to move now? Because your basis isn't 35 or 37 under. Your basis is probably 10 under. I think the local co-op, I might have saw 17 under, because they want your corn, especially if they're making feed or they're making ethanol. Here's the new crop plan, and this is what I think is the most important thing I can present, Joe, and I think this is why you invited me, is what's Marty doing in 19? Marty's going to make money in 19. He was able to plant about 30% of his corn before Easter. That's where we define it. We don't even call it months. He planted 30% of his corn before Easter, and it was a little rugged looking in May. It's 200 bushel corn. Marty's going to grow 200 bushel corn. It's not going to be his entire farm or his entire fields. Here's where he's at. He likes to sell corn and soybeans ahead. For the bean crop, he's out. He's not holding $8.80 cash beans because the government gave him $1.65 and his break even was $8.08. Hello? He made over $2 a bushel because he grew a big bean crop last year and the government market facilitation program. And so he had one of his best years he's ever had in beans. He cleaned out the bin in May. He had a lot of time in May to clean out bins. And there was a good basis bid at this little ADM plant down the road, and so he's done with beans. And so having a plan, old as well as a new crop plan. Now, here's the new crop marketing plan for corn. He started early, a year ago. Whenever December corn's over 420, you do not have to slap Marty Merchandiser. He's awake. Whenever you offer him 420 a year out, he's awake. We've been above 420 for about 6 days this summer. As recently as Friday. Above 420, December 20 futures. There's December 19 futures. He's scaling into this. You can say he's a fool. He didn't get 450. He didn't get 460. He didn't get 470. No. He's controlling the controllables. He's scaling in at levels somewhere between 4 and 450. You said, well, when's the last time we were above 450? December 19, yesterday. And so here's usually the feedback I get when I go to places like Macomb and Galesburg and Dixon. Then why weren't you here last week? This isn't my problem. This is you. Do you have a plan? And I heard Dave mention there's farmers that don't even have a price objective. There's no futures price objective or a basis understanding. Here's where Marty's at. Marty sold his corn ahead, but look very closely. Marty did something that only about 5% of the farmers did. Dave, do you see it? He bought a courage call in the spring. That's another Iowa State first down. What? He bought a courage call in the late spring to give him that confidence to sell those rallies. He bought a December call 390 strike for 20 cents. December futures are at 440. What's the value of that call option? 50 cents. And so he's tying options in. He's not anti-options. He just doesn't like to pay a lot of time value. He used that courage call to give him that comfort. And so if December 19 futures, the third week of November is at 450, he's going to make 60 cents on that courage call. He stepped back in last month and he bought a put. And there's where I'd suggest this crowd be. If you haven't done anything, are you going to protect these futures prices? We get back up into this 450, 460, 470. You better at least buy a put and put a floor under the market. You're bullish corn because you didn't grow the full complement of corn. Hop in my back seat. I'll show you where there's corn that's going to make 200 to 220 bushel an acre. You've got to be careful of just circling northern Illinois and saying, hey, if we can't do it, nobody can do it. Our northern Illinois and northern Iowa guys are a lot alike. If you can't do it on the good dirt, then you can't do it. But we've got more acres in Kansas and more acres in North Dakota. Iowa planted an extra 400,000 acres. Just in case you didn't, we did. Nebraska planted an extra 500,000 acres. Just in case you don't, we will. So be careful of getting caught up. Here's the plan. Sell as the market's going up. Tie it to crop insurance. You were guaranteed $4. December futures, you've known that since the first day of March. Is just scale into this. Marty had no idea that 473 was the high. He just knew that he had $300,000 of cash flow needs in the fall and winter. And the last thing he needed was all his bushels sitting in storage unpriced. And Marty's been at this for a while. He's been farming for 32 years. And he kind of looks at it as a game. He ties crop insurance as a part of his pre-harvest marketing plan. And he sells or scales in as the market's going up. He was done selling the 25th of June. You said, why? It's the seasonals. It's because the seasonals reflect the market rallies into May and June and peaks and then sells off. So he's 70% of his corn bushels are priced. He's got 40% of those bushels with a courage call that he was able to take advantage of the price, and 20% of those bushels he's got a put option. Crop insurance is key. This is your #1 government farm program. It's not MFP. It's not ARC or PLC. It's the crop insurance subsidy, and it's how crop insurance works. And here's how it works in a nutshell. If you missed the first 19 years, I'll catch you up. All right? You take your APH, you keep your records, production evidence by farm field. Even if you're in enterprise units. Now, Marty was guaranteed 192 bushel an acre as long as the planter dropped the seed. He's guaranteed 192 bushel an acre, and he's guaranteed $4. And he's willing to commit most of those 154 bushel to delivery because he doesn't have adequate on-farm storage. And he's got processors that are well within an hour drive of his farm. And so crop insurance, revenue protection, he uses 80% and he buys hail. And I don't think hail's going to be a big issue. It's pre-harvest marketing that allows Marty to make money. Marty bought an extra 80 acres 2 years ago. And he told me, Joe, do not tell anybody. He's going to buy another 80. The old lady down the road has already talked to him about buying another 80. This guy is not sitting on his laurels. He's pre-harvest marketing consistently every year using crop revenue protection because he knows he's guaranteed bushels if the planter drops. He knows he's guaranteed the futures price, and he's not afraid to deliver bushels. He could use hedges or options. Don't get me wrong. You saw he's using both put options and call options. And then he's guaranteed price. He's guaranteed the higher of December corn futures in the month of February or October. Hello? He's guaranteed the higher of November soybean futures in the months of February or October. And so what he sees is this slight basis risk that's probably not going to occur in Iowa. It could occur here, where the cash price is higher than the futures price, and he knows about prevented planting. All right, I've been around prevented planting every year since 2013, and I want to address prevented planting. He knew that if the planter didn't drop, he better not be aggressive in pre-harvest marketing, and you should have known the same thing. If you're not going to drop the planter, you're only going to get 55% of your revenue guarantee for corn and 60% for soybeans. Prevented planting is embedded inside the combo policy that we call revenue protection. So I thought it was kind of fun. I've had this out in front of the lenders. I've presented to the Iowa Bankers Association, the Iowa Community Bankers Association, the Iowa FSA lenders. And so I thought, it'd be kind of cool. Why don't I roll this to Northern Illinois and check my math? The crop insurance agents are in the back of the room. If Marty had taken prevented planting at 80% level, he was guaranteed 154 bushel per acre. If he does file prevent plant, then he gets only the spring price. He doesn't get the harvest price. That's the way crop insurance works. So his $616 an acre guarantee is times 55%. That farm across the road, if he files prevent plant corn, that farm's going to get about $339 per acre, minus the premium, which will be subtracted next month when you get your PP payment. I hope that's owned land. I hope that's owned land, because if that's cash rented land, who's going to get most of the $339? The landlords. So you landlords were waiting to hear something good. You're going to be okay. It's going to be your tenants that take prevent plant that I think probably are not going to make a lot of money. Soybeans work the same way. You take your APH times your level of coverage, your guaranteed bushels, times the spring price, and you multiply that times 60%. Now, I always have somebody in the crowd say, how come soybeans use 60% and corn uses 55%? You can thank the North Dakota farmers for that. Because if there's anybody that's figured out how to screw around with crop insurance, I'll vote North Dakota and Texas every year. And they were taking prevent plant on corn. And it's kind of funny, they took prevent plant for 5 straight acres, and they were always corn acres. You could not take prevent plant on any more acres than you planted in one of the last 4 years. And so I hope most everybody in this room have good crop insurance agents, and you were very well informed. I believe of the roughly 8 to 10 million acres that are PP, I believe that'll happen. We'll see that probably in September, October report. I believe most of those will be corn PP. Even if they were going to plant beans, they'd file corn PPY. Corn pays a heck of a lot better than does soybeans. Most of these acres that didn't get planted will be corn prevented planting, but those acres in that unit cannot be more than you've planted in one of the last 4 years. So crop insurance is pretty prime. We've had crop insurance for a long time, and you can just kind of see how crop insurance works. Next year, we'll throw SCO in. That will come with the price loss coverage, or the PLC. And so there will be another decision to make next year if you elect and enroll in price loss coverage rather than average revenue coverage. So I want to make sure that you're well in tune. Crop insurance is a decision that you make annually on or before March 15th. This is an annual decision. You make it by crop, by county, and you can decide whether to be in optional units, which are all your fields in the section, or enterprise units, where all fields in the county. And you can see why a lot of farms have moved to enterprise units. There's more risk, but there's lower subsidies. And so for those that took prevent plant, you're going to get to pay your premium just a little bit early this year. Is because the crop insurance industry is going to extract that premium if there's a prevent plant payment for that crop in that county. for the Farm Bill, and I'm not going to step in because this is the role of the University of Illinois, and they do a great job. All right, and I work with Gary Schnitke, and I work with Scott Irwin, and I work with Nick Paulson, I work with Jonathan Koppas, but I want to give you a preview of what's coming at you at about 5 miles an hour. It's called the ARC PLC decisions for the next 5 years, because this will be the first year of a 5-year farm program. You're going to receive crop insurance premium subsidies for 5 more years, 19 through 23. They won't look much different than they have over the last 5 years. But you'll get a choice to make between ARC or PLC. That decision will be by crop, by FSA farm number. It will initially be a 2-year election, and then you'll enroll for 19 and 20. That process will start in early September, and we believe it will run until the middle of March, and you do not want to be in a hurry. You do not want to be in a hurry in an ARC PLC decision, because the longer you wait, the more information you have. But it's going to look a lot like the 14 program, but there's not going to be much money available. And you said, why? Why aren't I getting more government money? The government's got a different way that they're going to provide you money. And it's probably not going to be ARC PLC. It's primarily going to be disaster money as well as this market facilitation program payment. I believe most of you will probably end up in an ARC County program, perhaps an ARC IC, that's an individual program. If these national average cash prices fall below 370, then we might see people in PLC. I think corn prices are going to be very well supported. So for 19, I don't know that the national cash price will be below 370 corn, 840 beans. You've got to be below that for the marketing year to trigger a PLC. I believe most of us will end up back in some sort of an ARC program for 19 and 20. If you are in PLC, then you can purchase that supplemental coverage option. So there will be a little more information that perhaps we didn't see before. Landowners, your operators on your farms can update their PLC yields this winter. So if we've got landowners in this room that have never seen the yields on their farms, you should put that in the lease. I would say 80 to 90% of farmers will go to the FSA office late winter and update their PLC yields using 13 through 17 actual production, crop insurance, production evidence. So the crop insurance industry will be really busy this winter as the insureds want their 13, 14, 15, 16, and 17 production evidence by crop, and then reconciling that back. So beginning in 20, you can have a new yield. It'll be the farm's PLC yields. Soybeans, and I'll wrap us up. There's that data over the last 19 years. We had to take a couple years out because the actual futures price was below the national loan rate. And you can say, well, you know what? Soybeans look a lot like corn. It tends to rally in the late winter, kind of peaks out here in the spring and summer, and then it sells off, kind of like corn. But this is 19 years of data, and there's a new kid in the block, and it's called South America. South America produces more soybeans than we do here, and that's changed a lot over that 19-year period. So I believe the seasonality of beans can often be a rally somewhere in this December, January period, and then again in the late spring and summer. I think South American production has somewhat distorted this. Let's take a look at the new crop marketing plan, and this is Marty's biggest concern right now. Marty's not concerned about hail. He's not concerned about his corn marketing plan. His biggest concern right now, on the 16th day of July, is this new crop beans. He was fortunate enough that he stepped in and got 10,000 bushel of beans sold. And you can see those were forward contracts to a processor, harvest, delivery. And so he's got beans that he's producing, roughly 500 acres, And you can kind of see that those are going to an ADM. They're going directly to a processor. Here's the problem with Marty and most everybody in this room. You don't have any beans sold. And some of you are still hoarding old crop beans. And I'm guessing you're probably going to carry those beans into next fall and winter. Now, here's my good news. I believe if there's going to be a rally in the futures, I'll vote on beans. You said, why? 80 million acres. And if there's a crop that's going to get nipped, I think it'll be beans. I think we could have a lot of trouble getting this 48.5 bushel an acre on 80 million acres of beans. And I'm not bullish beans. I'm concerned that we're going to have a lot of beans unpriced going into fall, and we've got even more bushels that aren't priced. And so you said, well, what's Marty going to do? Well, so far he's done nothing. He doesn't have enough bin space. He doesn't want those beans sitting at the co-op and elevator. He sure doesn't want discounted for bringing in wet beans. And so his strategy has a lot to do with what the government does. And I'm not saying the government USDA NAS. It's FSA. It's the Market Facilitation Program payment. There's a payment coming at you. All right, this payment's coming at you very slow. It was announced the 23rd of May. It's called the Market Facilitation Program payment. It's going to be by crop, by county. It'll be a preset number. And I think Marty's decision is going to be based on how big is the MFP. And I get roughly a third of that in August, another third in December, and another third in February. This is under wraps, folks. This is still under wraps. What Marty's going to do is he still wants to price beans, but he's not going to use the November. He's going to use the January and March. And you said, why? Carry. He's got 12-cent carry between the Nov and Jan. And he's got almost 20-cent carry between the Nov and the March. He's not paying attention to November soybean futures. He's going to stash beans. He's going to put beans in the little bin on the home farm. That's a pretty common strategy, isn't it? Marty's going to have to free up bin space that usually is corn for beans. So when you look at a strategy, it looked great in December when he sold those first two increments. But the fact is that we haven't been back above the 954. So Marty is going to implement what I call the Hawkeye strategy. What's the Hawkeye strategy? Lower your expectations, Hawkeyes. You're not that good. You're just not that good. He's going to try to scale in using January futures. The beans are on his farm. Better basis opportunities. Nobody else is going to be selling beans and delivering them in December. Marty is. Marty is concerned about having to stash these beans. And he's sure not going to stash them for a year. But I think we're going to have tough sledding when we get up above this 950. It's probably going to take some sort of a weather concern. So additional funding, I'll be brief. I think you knew that Congress had passed the disaster relief program. You can thank Senator Grassley, the farmer from Iowa, for getting the extra $3 billion that are going to flow out to agriculture, especially to help with prevent plant and flooded grain bins and those types of things. Here's the MFP program that was announced on the 23rd of May, and we don't have anything else, folks. We think there's around $14.5 billion. That's more than we had last year. It's not going to be loaded towards beans like last year, $1.65 on beans and penny a bushel on corn. It's going to be a county-based payment. It'll be based on your certified planted acres or certified failed acres. So I hope you did a good job at the FSA office. By the way, they extended you. You've got till Monday. So if you didn't make the FSA office, you have to have planted the crop to get an MFP payment. If you took PP, then you likely have to have planted a cover crop. I don't know those payments. They're going to be based on a county. They'll be available roughly a third in August, a third in December if the trade issue is still on with China, and a third in February. So with that, I just thought I'd wrap us up with some strategies for late harvest and additional corn planting in 20. Book propane ahead. Summer fill is what we call it in Iowa. I have no idea what you call it here. It's our cheapest propane of the year. And so we're going to book our propane early and make sure we've got adequate propane to dry this corn crop. I think you've got to be in your fields probably by August. We're going to start in 2 weeks. We're in our cornfields in 2 weeks. As Iowa farmers are religious about being in these cornfields, doing ear and kernel counts. We do not wait for Pro Farmer to tell us what the yield is. All right, that's kids stuff. All right, we are in our fields about 2 weeks after pollination, pulling back silks, counting kernels, counting ears. And again, we're not going to know our ear weight until we get out into September. But I think that's where you should be. If you're farming and making a living at this, I think you've got to be in tune with your own yields. I think we're going to have to spread harvest out. I think you need to identify where the driest corn is because that's the corn that I'm going to first. Marty texted me the other night. Marty said, hey, Steve, I've got a 7 over corn delivered last half sep. Think through that. He's never seen a 7 over last half sep. That processor wants his new corn, and he's bringing it. He's going to have to artificially dry it. But his first cornfield planted, 114 days, will be his first cornfield harvested, and it goes through his dryer. Don't forget your crop insurance agents are going to want your production evidence. So if you're still harvesting Thanksgiving, like many of you will be, do a good job of keeping records by field, and that's going to be tough. As you can use crop insurance yield monitor data, but calibrate your yield monitor. You can use scale tickets, but calibrate your scales. Those are called soft records. But if there is a loss, you'll also be required to provide hard records. Be careful of dumping new crop on old crop without a grain bin measurement. That's commingling. That's crazy stuff. Take yourself out of a couple $100,000 commingling bushels. And then lastly, I think booking fall fertilizer. I just finished 2 magazine articles. Max, you'll like this one, Farm Journal, I think you heard about them, and the Farm Progress, I think you know a little bit about them. I just finished this article yesterday. It was called Fall Harvest Strategies. I think we're going to have to book fertilizer early, expecting those prices will be higher in the spring. There's probably excess fertilizer out here. If we got a checkbook, I think we're going to have all sorts of compaction issues. I think we're probably going to drill towards more corn acres in northern Illinois. It's because we've got a lot of PP ground. We've got a lot of land that's pretty saturated, but it's drying out pretty fast. And most of the weeds are gone. There's some mare's tail out there, don't get me wrong. But I think these farmers are going to take care of those, and I think a lot of this is going to go back to corn on corn acres. I think you've got to maximize your on-farm storage. I think you've got to be thinking about that now. Minimize the use of commercial storage, and I'm not against elevators and co-ops. It's just hard to come out when you're paying drying and shrink and fixed storage cost and getting their basis. And then I'm suggesting that you are marketing a year ahead, just like Marty. Just like probably 2 or 3% of the Iowa farmers. You're already looking out, knowing there's more corn acres coming at us next year. Because there's no guarantee that 20 looks exactly like 19. We're going to lose demand, and we're probably going to grow, in my opinion, an extra 6 to 7 million acres of corn next year compared to this year. So this year, if we're at 90, we're going to 96 or 97 next year. Seed costs will lift. Fertilizer costs will lift. I think cash rents, in my opinion, all right, are going to stabilize where there's good relationships and there's good stewardship. I think our cash rents will stabilize. And we actually might see some cash rent pressure where we've got some of our poor soils. This is me in 2 weeks. I use the Pioneer method. I'm in 12 different cornfields. I check crops on Sunday nights. I report to the USDA. I'm a volunteer. And I'm after this yield. I want to use my kernel counts. I want to use my ear counts. I don't want Pro Farmer to tell me the third week of August what my yield is because they randomly drive through Iowa and only 6 states. I want to know about what that kernel count is. And then I want to know the maturity. I want to stay focused. When will that crop black layer? Iowa and Nebraska is going to get her done, folks. We will black layer out ahead of the frost. I think it probably will be a bigger challenge to the eastern belt. We're probably going to have later harvest and wetter crops. Our resources are free. I'm from the Land Grant University. And we do a lot of work on crop marketing. We provide meetings and workshops. We've got an online course that will launch in November. And then we've got a great partner in the University of Illinois. Either we know them personally or we train them. Scott Irwin's from Iowa. Nick Paulson studied at Iowa State. So we've got great relationships. 1 and 2, Ag Decision Maker, Iowa State. Farm Doc, University of Illinois. Great resources. With that, I'd like to thank you for inviting me to Northern Illinois. It's been my pleasure. I'll stick around during lunch. I've got to hear from Max. I haven't had my Max fix for almost 8 months now. All right. And so again, I want everybody to have a great year, a safe harvest, and let's stay focused on the things we can control. Good luck. God bless.
I was just checking to see how much time I had. You know, I'm programmed to 60 and 30 seconds, so you don't have to worry about me going over here. Well, good morning. I guess it's still morning, isn't it? I just sat through a class in college here, and what a great session. 2 great speakers and great presentations, and you've had an excellent opportunity to download a lot of information over the past few minutes. Coming out here today, I was looking across the road, both sides, and I thought, what a mess. And I'm not talking about politics just yet. We'll get to that momentarily. I had a buddy I grew up with in southern Indiana, Dickie Smith, who just retired from being the school maintenance man. He was the janitor. He had a big ring full of keys as he would go down the hallway. You'd always hear him as he was coming down the hallway. He lived at the edge of town. He would come out and help us on the farm. He was a good buddy of mine, still is. And every now and then he would say, Armstrong, this is a mell of a Hess. And it really brought home to me, of course, looking at any kind of a situation through life, what we were dealing with. And I think as we look at our nation and what's going on now, some of us who've watched this country over a long time are thinking, we got some serious problems here. I'll talk a little bit about that risk in a moment. As you look at the crops, and there is that tendency, as the guys have talked here, about judging crops out your kitchen window. We always cautioned that during the drought years, and these guys enumerated those years so vividly, except for one. And you didn't start with 74, Steve.
Ooh, that's right.
That was a famous year, and many of us are recalling that year because of the early frost that year.
Southern corn leaf blight, too.
Southern corn leaf blight. You hit that one on the head, too. I remember that was stressful. The Watergate hearings were going on back in those days. Actually, Nixon resigned in 74. That was another thing to remember back in those years, all that was taking place there. But I remember it because I interviewed Earl Butz right after that big frost. I was a college student at Purdue, and Earl had been the Dean of Agriculture, and he was coming through. He was the Secretary of Agriculture under Nixon and Ford. Very colorful, some of you remember him. Very outspoken, some of you remember that. It ultimately cost him his job. But I remember Earl. Well, Earl was the only guy who ever accused me of dyeing my hair. True story. About 5 years before he passed away, he called me over to the seat where he was at the Farm Progress Show, and he said, "Why is your hair so dark?" I said, "What do you mean, Dr. Butz?" He says, "I know you, it shouldn't be that dark." I never did it again after that, after Earl Butz called me on it. But he was the guy that took us into the business of exporting, of course, in a big, big way all around the world. And I couldn't help but think about that a little bit. Nobody's really said these words yet today. Trade war. Nobody has spoken that yet. And we have to continue to be concerned about it and what the long-term ramifications are. And many of us feel and hope and pray at the end of the day, we're going to come out okay, but as we look at demand destruction and what's happening long-term, And we mentioned Brazil a few minutes ago. You were talking about Brazil. Long-term, permanent changes have been made in the past few months. And I think of Eldon, not only for two reasons, sitting here watching Eldon Gould, listening to all of our discussion about risk management because of his leadership as director of the Risk Management Agency in Washington, where he rewrote policies, as I recall, with the private companies back in those days. But I also think of Eldon because I was with him on trade missions for the old U.S. Feed Grains Council. As they worked to start, in 1960, they started working to develop markets around the world, not only to expand those markets, but to retain the existing ones. We were in various sessions. I think I was on 8 different trade missions with the Feed Grains Council, then the Grains Council, and watching those one-on-one relationships develop between our folks out in the field trying to develop markets and those overseas buyers. And it took a lot of work, and still takes a lot of work. And to see things happen on the trade front, where you worry about long-term trends, it's tough to watch, because we know how hard it was to establish those markets. The other thing that's going on, and Steve talked about Brazil, long-term changes are continuing to be made down there. We've had the logistics advantages over the years because of our river system, which we failed to really upgrade on a timely basis. They have been ratcheting up not just their production, which continues to grow, but their infrastructure, which continues to be improved. And maybe just as important as anything else, they made a change at the top. They've got a guy running the country now that the farmers feel very good about. Many of them love him. He's making very substantial changes to their benefit and potentially to our detriment. There's one farmer, and I watch him on Twitter, and I'll talk about Twitter briefly in a moment, but I watch his posts. There's a guy in Brazil, and I don't think he has too many followers, but every now and then he'll post something about wild Brazil. And this week he posted a python as it had swallowed a calf. And he showed a news reporter lying down next to it doing a report as this big python was trying to ingest this calf. I guess he figured he didn't have much to lose. The python had a mouthful and a body full already. But what he points out as well in some of his tweets is the tremendous advances that they continue to make in terms of production. And they're going to be there forever. And they're going to be there with continuing production gains. Not just soybeans. We've seen the safrinha corn crop grow dramatically. I think some of the latest projections are the Brazilians might plant 1% to 2% more acres of beans this fall. They might, if I read it correctly, some are thinking they might ratchet up the safrinha corn crop by as much as 7%. They're there to stay as a major competitor of us, continuing to fight with us for the worldwide demand. At the end of the day, we hope that things will settle out to the benefit of all farmers, but it reminds me of one other risk you need to try to manage. And this may be the toughest one of all. Of all of the risks that you have in your business of farming, that political risk ultimately could cost you as much as a poor marketing decision. Now, as Steve was talking, control what you can control. But I would suggest, too, that you need to be concerned about trying to influence that political process. And that means on both sides of the aisle. I saw Bob Pritchard here a few minutes ago and was talking with him, and I was not just disappointed, somewhat devastated when he decided he wasn't going to run for re-election. You know why? Because it meant there was one fewer guy, one fewer person in the state legislature who understood, appreciated, and was working for agriculture. And in this state, oh my goodness, the cost of losing a farm state lawmaker. Now, there are others who have stepped up and are working hard in that whole process. But we're going to need both Republicans and both Democrats engaged in this whole process going forward. That's a risk. That's a big risk to you. If you're not trying in some way, shape, or form through an organization or on a one-to-one basis, getting to know your lawmaker, or in the case of Washington, getting to know his or her aides, the agriculture aide. Because that congressman or woman has a lot on their plate. There's a lot going on. They're involved in all kinds of processes, not the least of which is campaigning for the next election the moment that they are elected. but there's somebody on the staff in many instances designated as the ag expert. Make sure you get to know them. Work with Farm Bureau or corn growers, soybean association, whatever the group is you embrace, to try to have some kind of relationship with them so that you can have a channel, a conduct of some sort, conduit into them to bring them information about what's important to you. And being involved in the political process is crucial. If you're in a multi-generational farm and there's a generation behind you, you really have to be worried about the politics of the future. And it's ugly to get involved in many instances. I'm sure Bob could relate a lot of horror stories of being involved in the political process, and it's distasteful to many of us. But if we don't identify young people who perhaps we can engage, encourage, finance in some way, good people that we know have the opportunity to succeed in that political process, then it's everybody else against us. And you know as well as I do, sitting where you are located, it's coming at you. And the misconceptions, of course, you deal in this every day. You know it so well. I don't have to talk to you about this, but it was fresh in my mind because I saw a tweet by this guy who is now, he was a former food editor, I think, for the New York Times, and he's now going to do a documentary on Iowa. And you've read what he has written. By the way, it's PBS that's going to put it on, and I guess one of their underwriters is financing it. I'm not sure when it's going to air, but I read one of his columns, and it's every misconception about commercial agriculture that you can possibly imagine. And he's putting it out there as if it's the gospel. I mean, that locomotive is coming down the tracks, these challenges that are not going to go away in terms of the whole political process. Like Donald Trump or not, he has at least selected somebody I think is a pretty good Secretary of Agriculture. Not everybody can handle that job. Sonny Perdue, I think, was probably made for that job. There have to be days that he gets up in the morning, he thinks, especially after he reads tweets, he thinks, oh boy, how are we going to get through this one? He's got the temperament for it, though. By all means, he was the governor of Georgia. I actually drove Sonny's old tractor. Did you know that? Sonny got his dad's Farmall 656 a few years ago. And some guys restored it. At the time, Sonny Perdue was the governor of Georgia. And I was going to be down there doing something, and they said, hey, do you want to drive the governor's old Farmall? It's all fixed up. And I thought, well, this is fun. This is going to be cool. They said, we just need to take it a little ways from a shed on down into the field. They're going to do a photo shoot there. And the governor will be brought out by a trooper, and they'll be waiting on you. What they didn't tell me was that it was to be transported in a suburb of Atlanta, that I would drive it through the suburb in the morning rush hour. Now that hits close to home for some of you too, doesn't it? Yeah, I got all those one-fingered salutes. Who would expect Southerners to be so uncivil? Must have been the Yankees that moved down there, right? I hear that all the time. My wife and I moved down to North Carolina about 5 years ago. I fly back every week. I hopped on a plane this morning at 5:45 in Raleigh, and we come up and work with Mr. Ryan Rue standing over behind the camera here, one of our team members for This Week in Agribusiness, and Kane County resident, and really appreciate his work. But just to talk a little bit about the geography, they're hurting in that part of the world for moisture too. And they need to have some rain down there. I think there's one thing that strikes us about this particular season, how widespread the challenge has been. And as Steve pointed out, you go west of the Mississippi River and it's a different story. Crop bulletins bear that out. For all of the flooding attention that we've seen on Nebraska, there's still a lot of good crop land out there and a lot of good crop growing. By the way, let me relate one story to you about that March flood. I was out there, we shot some stuff for RFD TV back in the spring. I was in the little town of Hamburg, Iowa, right there in the floodplain of the Missouri River. Any of you know where Hamburg is? I was standing there with the farmer, and he pointed down through the field there, and he said, you see that tanker sitting down there? And it was a semi-tanker. I said, yeah. He said, that's loaded with diesel fuel. I said, okay. He said, it was sitting right where we're standing. That tanker was 1/4 of a mile away from where we stood. The power of that water carried that loaded tanker without a tractor hooked to it, carried that tanker that far. The tank was intact, not compromised in any way, and the fuel was still good in there. So that was a reminder of the power of water, but again, somewhat of a small area despite the impact of that flood. There's a lot of good crop out there, as Steve pointed out. Different story as you go east, as you know. I think if you looked at the worst states in the weekly crop bulletin last night, the 5 worst states were, not in this order necessarily, but Ohio, Indiana, Illinois, Missouri, and North Carolina on corn. And the 5 worst in the condition ratings, again, just condition ratings, for soybeans would have been Ohio, Indiana, Illinois, Missouri, and Michigan, interestingly enough, in terms of the actual condition ratings, if you buy into watching that. But I just want to reinforce one thing Steve said, too, in terms of USDA's reputation that has really taken a hit in recent days. As we said years ago, if they weren't in the business of doing it, only Cargill and ADM and the private estimators would be doing it. I think I have a little more faith in USDA. But government will continue to play an important role in what you do. One thing to anticipate, as we've been talking about these payments out of the trade war, is to anticipate what rabbit could be pulled out of the hat in an election year. And if you think back through presidential election years, and this is a bipartisan thing, I mean, everybody's been involved in this, Democrats and Republicans, there are things that get pulled out of the hat to try to, in some way, encourage that vote for that incumbent. So what will it be? Will there be some of those things? Keep your eyes open for things that could be coming up, even on a local basis, that might be an effort to influence the election. Well, you know, I have a tendency, and this has been so great listening this morning to Dave and Steve, because I reflect back on many of these years. We like to talk about analogous years, and as these guys have pointed out, there's really no good comparison for this one. But as I was driving out today, listening to the forecast, the heat is going to be so bad it could kill you this weekend. Do you remember back when you remember, don't you, when it was so bad in Chicago, they were storing the carcasses in reefers that summer? Yes. And there was a little controversy after all was said and done. I was on the fire commission over in the Lisle, Woodridge, and Naperville area on the board of fire commissioners at the time, and I remember the debate about how many people actually died from the heat. But of course, Chicago has a record for difficulty in counting things. Whether it's people showing up in Grant Park, or voters, or at the same time carcasses from the heat of summer. But it was hard not to think back to those days. One thing that occurs to me too, thinking about this, is how it's a stressful time for so many of you. And I remember that, of course, in other years when we've had short crops or low prices or something else going on, maybe even that political risk I was talking about. And managing that stress, and Steve referenced this with the farmer that he was talking about, Marty, handling some of this marketing and getting that done, and then finding a way to relieve stress a little bit. And a lot of us need to find a way to do that, because it's not easy. And if you don't find a way to do it wears you down. I put my fat ass on I can say that, can I? I put mine on a bicycle. I don't go on the roads. I don't trust the motorists that are always trying to pass you when you're doing a left turn. I get on a trail somewhere. There's one over in the Wheaton, Naperville area that I ride, and there's another one down in North Carolina. The difference, this one has crushed rock. That one is paved down in North Carolina. The other difference is the size of the snakes. These are like shoestrings. Those down there along the Neuse River, when you go over one, it's like a fire hose. And sometimes you just have to go over one. They come out so fast you raise your legs, which isn't easy for a fat boy like me, but you raise your legs as high as you can. I find that time out there away from the smartphone, which I left today in my vehicle, which Mrs. Armstrong instructed me to do when we had dinner the other night. I left that stress away. And then I get out there and clear my head, if it's only for 45 minutes or an hour. Just diverting your attention, listening to a few tunes, just getting away from it for a little bit can really make a difference. It does for me, and I think maybe it might help for you too. But whatever it is, maybe you pump iron, Maybe you run. I can't run, but maybe that works for you. Find a way to try to relieve that stress a little bit. The other word of caution, and this goes back to the days of my youth, when Jim and Stella Faye Armstrong said, "Stay out of the pool hall. We don't want you in the pool hall." And after football practice, a lot of guys would go up there and get a cheeseburger. And I wanted to go in there so badly. But folks explained to me, Mom and Dad explained, there were guys playing cards in there. There were guys playing pool in there. Pinball. What's wrong with pinball, for goodness sake? They were not the kind of people my parents wanted me to be around and to be influenced by. And you know what? It was pretty good advice. Not that there was something sinful, not that there was something unlawful, not that there was something amoral, but these weren't the kind of characters that I should be learning from, being influenced by, and motivated by. They knew that there were better people in the community that I could be around. Have you thought about that a little bit? You know one thing, and I just loved it, listening to the discussion about Twitter. Because it's just like the coffee shop of 30 years ago. And you remember going into the coffee shop, some of you, 30 years ago, sitting around there in the depths of that agriculture depression of the 80s. And if you weren't feeling lousy when you went in there, with all of those "can you top this" stories, you were feeling lousy. It was like reading the front page of the Des Moines Register back in those days. The late, great Don Mumm was the farm writer. And nothing he wrote made it on the front page. Every negative, bad story you could possibly imagine was right on the front page of the Des Moines Register. I remember it. And it's the kind of thing that feeds on itself after a while. Twitter is a wonderful tool. I haven't forsaken it yet. I still follow. I actually have a shadow Twitter account under a fake name because I set that up with key individuals I want to watch. Economists I really have come to respect. Market analysts I've come to respect over the years. Folks in the world of politics that I follow, certain media outlets, all that list is getting a little bit slimmer, I must say, at all times. But I'm watching people that I ought to be watching. You know, it's like anything. Twitter becomes, you've got the class clowns in there, you've got the Donnie Downers in there, and there are some really good people and some motivational people who are tweeting that you really ought to follow too. They may be injecting things that are just quotes of the day. It may be faith-based. There's some pretty good stuff on Twitter, so don't totally forsake it. Just be a little bit selective. And the last thing, how can you possibly run as complex a business as has been laid out here by these excellent presentations before me, unless you surround yourself with the best team you can possibly avail yourself of? The complexity of agriculture today is so great, you can't be, I maintain you can't be the expert that you need to be in all of those disciplines. But can you access the best agronomic advice? Sure you can. Can you find the best marketing advice? Absolutely. Crop input procurement? Yeah. Legal? Absolutely. That's, in this day and age, you need to have that help. My son-in-law is a lawyer, and I still like him. And my wife loves him, which is a whole other story. But you need to put the best team around you that you possibly can to succeed today. I really believe that, and I think that's maybe the most important point to leave with you. Some of you invite us into your homes via radio or television. We sure appreciate that too. It's been a blessing for us. I hang out with that guy by the name of Orion Samuelson, have for 42 years. That's right. I was 13, I think. Actually, funny true story about this week. Yesterday was the 50th anniversary of me getting my FCC license. Back in those days, to run a radio station, you had to have a license issued by the Federal Communications Commission. I mean, to even just go in and be an announcer. And you had to take a test. And you had to take a test in a big city. So we were going up to visit relatives. Oh yeah, there was another reason. I was going up to Detroit to be in the National Bible Bowl. And so I went up there, and that summer I got everything done, the FCC license, I took the test, I got my driver's license that same week, it was in the National Bible Bowl, and never missed a Sunday of Sunday school until I got into the radio business. And that was the beginning of the end, I guess you'd have to say. But thank you for all of the support that you've given us over the years. Those of you who happen to be in our audience from time to time, we sincerely appreciate it. Thank you for the opportunity to come out and join you today. Joe, thank you. It's good to see all of you folks here and to benefit from your expertise to you guys, Steve and Dave. Have a good day.
Thank you.